Well, that is so dope. All right, guys, welcome back to episode 3 of Young Money. We have our co-hosts, me, myself, Felix, Mike, and Pro. And today we are going to be interviewing Kevin Zhang, um, someone that I know for a very, very long time. Not very long time, but 2 years approximately. But we connected over social media. We help each other out with a lot of like business and finances type of strategies and whatnot. And now he is pretty much running his own Telegram group chat for option trading. And since that's all we do on a daily basis, we spend like countless of hours every day researching the best strategies and routes to take for upcoming trades. We're gonna have Kevin share some of his experience and kind of like his outlook for 2021. So again, welcome Kevin. Let's dive right into it. Uh, if you can give us like a small context of your background, how you got started into trading, what are you currently, some of the trades that you're looking at for 2021, and kind of like your story behind everything that you're doing, man.
Cool, Felix. Thank you guys for sort of having me, Mike, Fro, and Felix. So a little bit about me. I'm fucking 23 now. I graduated from Binghamton University in upstate New York, and I majored in English literature and rhetoric. So, rhetoric is just making shit sound good. And basically, after I graduated, I had trouble finding a job. And that got me really upset because all throughout college, I had worked at some of the biggest companies from Reuters, which is, competitors to Bloomberg, to working at Colgate. And, when it came time to finding a job, I couldn't get anything. And, now I currently work as a marketing strategist, but I'm really very proud to say that I don't touch any of my salary. And on the side, I kind of do this sort of trading thing. And I started this in about early January or mid-January of this year. And now I can say that I've been able to impact, over 60 traders. Half of them are, MIA, they've quit, but those that have stayed with me consistently have seen some astronomical and some very, very nice gains. And I've worked with people that are influencers on social media to professional basketball players, so on and so forth. So that's just a little bit about me. I'm not a financial guru, but I'd say that I'm a continuous student of the game, and I'm always looking to improve and learn more. And then looking into 2021, I would say that the market is going to continuously run. We are currently in a very, very aggressive bull market. What we've been seeing the last week coming into as we sort of wrap up 2020 is a massive what we call Santa Claus rally. This time last year, if you look on Thinkorswim, Amazon ripped about 100 points, and today we see Amazon up about 3% for about a 110-point rally. And then I think, so long as the government continues to provide people with stimulus money, I think that means that the market will continue to grind higher, because you have to understand that people have never had more money than now, because unemployment is more money than a lot have ever had, and same thing with stimulus. So that's just kind of my quick 60-second snapshot on what I think about the market from a very macro perspective.
You know who I want to give a quick shout out to? Jerome Powell. Man,
Yeah.
this guy pretty much spent a $3 trillion marketing campaign on Bitcoin. And I'm gonna, I'm holding Bitcoin right now too. It's pretty much like the inflationary hedge asset of all time currently. And man, that is crazy. 2020 is definitely, a great year for all of us. For me personally, I did made a lot of money as well as my business. And moving forward, I feel like a lot of people this year, they pretty much took a little riskier bet, pretty much getting into like margin trading and whatnot too, right? So I'm not entirely sure if that's gonna pretty much continue on to 2021, or for me personally, I feel like there's going to be a major pullback, something that we saw in like early March uh, as of last year. So
Mhm.
that's kind of like my take moving forward into the next year. What do
Right.
you think, Mike and Pearl?
For me personally, um, I'm always bullish on the market. I know there are trends that we'll see, like the Santa Claus rally, hedge funds selling off towards the end of the year, people wanting to close out their taxes and whether it be saving positions for next year or closing it out this year. There's things like that that'll affect the market. But when it comes to day trading specifically, I think it's a little bit dangerous to go into a day with a specific bias, like saying, this week is Santa Claus rally, so I'm going to be bullish, and then you go into the market, you go long, or you have that bias going long when the technicals are telling you that that's not the case. So I'm a strong proponent of always following the chart over what you think should happen.
Yeah, I'm echoing exactly what Mike said. I think personally I've been burned a lot, and my biggest losses and when I was burned was when I had a bias. When I think a stock would be a perfect short, a perfect one to have a put option, but it just goes to the moon, or if it's gonna go up and I buy my calls, I buy my stocks, but then it just tanks right at the open. Maybe the morning panic, and I was like, maybe it's just a morning panic or bounce, but then sometimes it never bounces, and that bias is the one that destroys me. So for me personally, I'm a day trader, and I'm 100% liquid right now. Actually, I'm using all my capital just to day trade, and I like it that way. And I just take the market at face value, what it is, and I just trade the blue chip companies. So if it's going down, heck, I'll go down. If it goes up, it goes up. And I hear this a lot, that the trend is your friend, and if the trend is going up, you ride that wave up, and that's what I do. So I'm just excited to see the market at what it is, and I have no bias. I will make money at any way possible. The only time I don't make money if it's going sideways, but then if it goes sideways, I just go to a different stock. And I come back to that one when it finally makes a trend, because the trend is your friend.
Yeah, so I guess that's a good place to get started. Is Kevin, with your options signals and with the way you manage your group, what is your overall strategy? Could you just run us through that? Are you mostly day trading? Are you swing trading? Are you, just a general gist of things?
Yeah, so I guess there's a couple things. It really depends on what I'm looking for, right? So with regards to swing trades, I'll give it to you right now. I love to sort of look on FinViz, right, and just type in a stock, right? If it's a micro cap, if it's a penny stock, if it's that's a small cap, mid cap, whatever, right? If it's under $20, I like to look for insider buying, right? Because there's a bunch of reasons why insiders can kind of sell. I mean, executives could kind of have some sort of stock offloading program, but executives only buy for one reason. Whales only buy for one reason, right? You buy because you think the stock price is going to go up. You don't buy a stock because you think it's going to go down. So that's one thing that I like to sort of see and just kind of confirm my bias or confirm my prediction. Because ultimately, when I'm swing trading, I'm making a prediction and then I'm backing it up with money. So if you look at a stock like CLNY, right, Colony Capital. This is a stock that I've been very bullish on since around 270, 280, all the way down to 220s, 250. And basically,
are you able to pull up the chart on that one?
I'd love to sort of share my screen if I can. Let's see. Can you see my screen? Yes, no?
Let's give it a second. No, I don't see it yet.
Yeah, I can't.
Okay, let me. I'll share mine, and then actually, Felix, do you have Thinkorswim already pulled up?
Yeah, I do.
For this example, you could literally just go on FinViz, FINVIZ.
I think we lost you there on the video, dude.
You lost me?
Oh no, I'm still on.
Oh.
I'm trying to share my screen now. Okay. Can you guys see it?
Yeah,
I can
cool.
see it.
We can
So
see it.
if you type in CLNY, huh? CLNY.
LNY. Okay.
Yeah, cool. So
Hold on, guys. I'll be right back.
scroll down all the way to the bottom. All the way to the bottom. More. Boom, right there. So I'm not sure if a lot of people know about this feature. I'd say most people don't. But if you look at this, right, Colony Capital had about 200,000 shares sort of scooped up by executives, right? This is a pretty substantial size considering the fact that this is a micro cap, right? And basically, when I see something like that, that's my first confirmation. And then I look for, chart patterns, right? Is it currently at a Fibonacci retracement? Is it at a weekly or monthly support or resistance, right? And from there on, I'll kind of ease into a position, right? So if I'm looking to put 10 grand in, I might start with 5 grand. I might start with 3 grand. And then every time it dips a little bit, I'll hold. And in a span of about 5 months on this, right? This is September, October, November, December. So in about 4 months, I'm up around 90 something percent on that specific equity play. So that's one of the strategies that I'll implement for swing trading. And then in terms of day trading, I just kind of pretty much trade off of pattern trends. And then I'll be more aggressive when I look for things on Thinkorswim, such as the PC ratio, right? Otherwise known as the put to call ratio. So if you go on Thinkorswim and you just type in a random ticker, right? So for example, if you type in snow, right? You click on the trade tab, and then you type in snow, and then you go to all products. If you scroll all the way down to the bottom, you'll kind of see that today the PC ratio is around 34,000 in calls and 25,000 in puts. So this tells me that relative strength wise, this is a stock that is not very, very strong. And then if you look at the sort of percentage change for this specific day, I mean, Snow is down about 6%. So Snow is down $20 today. So those are just a little, quick snapshots on things that I implement for day trading, for swing trading. But I definitely sort of, have a couple of tools that I kind of, decide what to use depending on market conditions.
That's interesting.
All right,
So if you go back
Yeah.
to Finviz,
Yeah.
on that CLNY,
Mhm.
you had pointed out at the bottom there was insider buying. So
Mhm.
is there some sort of like software or tool that alerts you so that you know when that insider buying happens, or do you have to actually manually go in there and check certain tickers to see if there's something new coming up?
Yeah, I mean, so if you go on Finviz on the day, I think if you buy the premium version, they'll probably like alert you on some of this stuff. Also, I'm just kind of a part of like enough trading communities where we all kind of contribute, right? So if I look at this setup, or a lot of times I'll try to identify what is hot, right? So for example, if SPAC is something that is very, very hot, right? I think that those are called SPACs are like special purpose acquisition companies, right? Or special acquisition like vehicles, right? And if I see like large buying in SPACs, or if I know that SPACs are relatively hot, then I might sort of take a position, right? Like one example would be, you guys might know of the stock NKLA, right? Nikola. But before Nikola was actually named L or NKLA, it was VTIQ, I believe, right? And let me just double check my information real quick. VTIQ.
Yeah, Vector
Yeah,
IQ.
exactly. So it was known as a Vectoy Acquisition Company, right? So I had already known about this stock even before this was hot. So I got into VITQ at around like $15. And then I sold it at around like $85, $90 when it started to get a little crazy for me. I was like, yo, this shit is going up too damn fast, too damn crazy. So that was an example of an option play that I did off of some insider buying. But those are just a couple examples, right? Don't just buy something because there's insider buying. Use that as another reason as to why you are leaning either bullish or bearish.
Love it. I mean, Michael, you recently shorted Nikola based on some of the recent news that came out in regards to kind of like fraud that you know.
Yeah. So pretty much what
Yeah.
happened was, Nikola had already done its parabolic move up to like the $80s, $90 range, and then who was it? Citron or Quoth the Raven? One of them came out with a short report, pretty much having 52 reasons why it was a fraud. Big sell off after that, but it still maintained a pretty sizable market cap. It was trading in around the $20 to $30 range. And then it just stayed like that for a while. And I decided to get in on puts. I didn't short it, but I did decide to go in on puts when GM said that they're pulling out of their agreement. So that was pretty much like the last nail in the coffin. Got a pretty good, I think it was like 100% gain on that one for me. And then our other friend, Jeremy Mateo, he got close to 300% gain on his puts.
Wow.
So that was a nice play. But I think your play was actually even nicer, Kevin, because you said you bought it at 15 and rode it up to 85.
85.90, yeah. But this was also when this was called VTIQ. So right around that top of the trend line, I kind of got out there because I was like, this shit going crazy, man. You know, I was up 500 something percent, and I was just like, hey, man, money doesn't print this fucking fast. Like I'm gonna beat JP at this time, and this is too crazy. Let's not get greedy. I've been burned multiple times, and I took some profits. Obviously, I've been trading it, you know, in that smaller range, but I'm not really a big fan of trading this now because the risk to reward, especially if you trade options, and if you have like 10 grand, 20 grand on this, it's hard for you to go sleep at night because on a day like today, right, Nikola Motors is up 20%. And Nikola Motors is off of fucking up this much because JP Morgan says that Nikola they have less risk than normal before. They said the price target has been reduced to reflect the execution risks associated with the tarnished brand, Koster said in the notes. So technically speaking, that's bad news. But bad news for a stock like this apparently seems like good news, and the stock rallies 20%. So stuff like that is makes no sense, and I try not to trade that kind of stuff. See?
Drama, and more drama. Oh, it's pretty quite interesting.
Right? I mean, can you believe it? In 2020, less drama means very, very good news for a stock, which, you know, I would say pre-pandemic, I mean, any kind of drama is not good drama. But it looks like bad news is good news, so stock went up. Can't fight the bulls, you know?
Try. Well, awesome. And then what about, are you currently in any Baba plays too? Because that's something that we want to briefly talk about, me and Mike. We bought Leap Calls actually, like a few weeks ago?
Yeah.
Like that expired like maybe May or around May or April. And it got hammered. I feel like just with any Chinese companies in general, whenever there's kind of like a negative news, they take it a lot more dramatic than, you know, U.S. companies themselves. But what's your thoughts on that so far? Have you been doing some research, or is there any potential plays that you feel like Alibaba is currently undervalued just based on, you know, just being one of the biggest market cap companies in China, and it really feels majority of the growth for China moving forward as well, right?
Yeah. So basically, regarding that, I mean, I traded Alibaba on Thursday on Thursday, right? So that's a few days ago, and I had actually
that was the day that it got down, right?
Yeah. So that was the day it got down, and I actually made about 15% off of it. So that's like, for me, that was like $200 because I only put like $1,500 because I wasn't trying to risk too much, and I'm actually still holding one contract where I'm down about like 20 something percent. So first things I would say is, if we're talking talking about options versus, let's start off with equity. In terms of equity, with Alibaba trading at around, what is it, like 220s, I'm more interested in buying at around like flat 200. But if I'm looking to get in, I might start easing in, right? So I'm a big fan of easing in or sizing in. So if you want to put 10 grand in, start with putting a grand or 2 grand, so that if it drops, you could start averaging or cost dollar averaging down, right? So that's number one. The second thing is, I think Alibaba is supposed to be valued at way higher, right? I mean, if you look at the last earnings call, all numbers are up, right? Revenue and a bunch of these other financial metrics that I don't really follow too closely now, because they just, they're so detached from reality. So I'm very, very bullish, because Alibaba's single day, which is Amazon Prime Day, I mean, their numbers kind of shat on fucking US e-commerce. Like, there's no comparison there.
Yeah.
However, what you have to be real about is, just like nobody can fight JP's money printer, nobody can fuck with President Xi's authority. Like, there's no if, and, or buts. I mean, you look at Alibaba, they raised stock buyback from $6 billion to $10 billion. You look at the stock today, I mean, it's up, a little bit, but that's also because the U.S. market is also up from stimulus signing. Like, if $4 billion of stock buyback isn't enough to attract investors, I mean, that scares me. $4 billion is a lot of fucking money for one specific stock. Obviously, it's spread out, but these are things that you want to keep in mind. So for equity, I'm long on, and you could check me out in a year from now. I'm gonna guess minimum 15-30% upside. I've been trading Alibaba since 2016 when I was in college, and that was the only stock I knew about in terms of Chinese companies. So I'm very, very bullish. And then, if you want to break it down, you could look into like JD, you could look into PDD and kind of how that Chinese sector does. However, if you're going to trade options on Alibaba, that's a different story. And the reason why is because you said, oh, you bought calls a few months ago. You probably got toast. But if you looked at the calls and the puts the day that Alibaba gapped down, the implied volatility was like at 120%. So technically speaking, as I mentioned, I bought Alibaba calls on Thursday. On today, I should be up money because Alibaba is now trading at 222, right? I'm in at 216, 217. But I'm actually down on my calls because I got what we called IV crushed. And IV crush is basically like a reduction in implied volatility. Market makers know that there's no more market news, so premiums got hammered down. That's why in my current play, I'm still down like 30%. Luckily, I only put a small amount of money because I wasn't super confident, but I'm not happy to be down 30%. So if you're looking for leaps, right? If you're looking to go 9 months, a year out, I would say number one, try to see if you could wait for large money or smart money. Wait to see if you kind of see some sort of large block, right? Is there someone putting down $5 million? Is there someone putting down $10 million? That's one. That's the first confirmation. And number two is let price action settle out a little bit. And what I mean by that is if you look at CRM gapped down off bad earnings or off the acquisition with Slack, right? But if you actually tried to trade the premiums that day, you would have gotten fucked because they were all over the place. But if you waited a few days, the premiums fixed itself, and then they started going back up. But right now, CRM is in like a wedge pattern, so I'm not really a fan of it. But those are two things that I would kind of consider if you're looking to trade options 9 months out, 12 months out. And bless you, Fro. So I would say those are the major things that you should look into before you consider buying options 9 months out, because trading options that long out, you need to be very, very fucking emotionally and mentally tough. Because I bought option 2022, 2023 Apple calls for 200 for 250 calls. I mean, it's been about 2 months. 2 months in, I'm still down about 20%. But luckily, I didn't buy a lot because I learned from these what I think of as beginner mistakes.
Love that. That is actually pretty insightful for us because recently we just pretty much honing down on trading leap calls specifically, right? And the reason being is our thought process behind it is just like, okay, it's a blue chip company, it's most likely it's gonna go up and whatnot. And then, just piggybacking what you're saying, you really got to be mentally tough and prepared because every single day we're staring like 5 to 10 hours on the screen, and it's really hitting us at that point. We're like, okay, it's so funny too because we got Netflix calls. It was up like what 30, like up 40%, Michael and I, and it's only been like a week and a half, and we just decided to sell it when, in fact, that there's definitely a lot more upside potential going on moving further. Like, as time goes by, right? So, yeah, I feel like that's super insightful, man. Like, thanks for sharing that experience that you went through.
I mean, I would just say one thing that has really, really helped me out.
Mhm.
You guys are all entrepreneurs. Fro, you're an engineer, you work. I challenge you all to write down a number that you're comfortable with, realistically, that you want to make in the markets. And when you hit that number, take profits or, scale out and then close your computer for the day, right? I've noticed that every time I got greedy, I got smoked. And what actually helps me is like, if I say to myself, okay, you know what? I got this much money and I'm looking to make X, that helps me deal with my greed. And what I mean by that is March, right? In March, before the market tanked, we were in a bull market, making money so fucking easy. Just buy calls. Buy calls a month out. All that shit goes up, goes back, goes right back up. In March, when the market crashed, I put 25 grand into fucking puts. I'm up big numbers, 5 figures. Never seen this much money in my screen. I was like, you know what? I'm gonna go up more. I'm gonna become a fucking millionaire. And then Robinhood crashes for 2 days. And the 2 days that Robinhood crashed,
I remember that day.
Those were
very well.
The biggest fucking rallies ever to the upside. And guess what? I couldn't do anything. So now I'm still in a lawsuit with them over that fucking shit, which has been 9 months. 25 grand, or more than 25 grand. That was 25 grand was my initial investment. That doesn't include the profits. That's all gone, right? And that came because I was greedy. Because I was like, you know what? Fucking 50%, 50% of 25K. That's 12 grand profit. That's not enough. I need more. So I would just say to you, like, when you guys are investing in leaps, what's your goal? Are you trying to beat the market? Okay, if you're trying to beat the market, S&P 500 over 50-year span averages 8 to 10%. If you make 20%, are you happy with that? Because unlike trading equity, when you trade options, if you're wrong, you lose your money. And you're also playing against time, right? You're playing against theta. You're playing against implied volatility. You're playing against spreads, right? If your spreads drop and your spreads are no longer tight, I mean, you could still be down on that, right? That's why I'm not really a big fan of trading stuff like Tesla or like Amazon. I trade them from time to time, but I don't really like swinging them because theta is fucking like $5, right? Astronomical numbers. So I challenge you all to kind of think about those things when you're trading these, 6 months, 12 months, 2 years kind of leaps out.
Yeah, it's funny. I looked at Tesla options for like even holding it for a couple of days, but the theta was so much greater than the delta that even if you hold it and it gains $1, but for every dollar you gain and you hold it to the next day, you're automatically, it's a losing trade.
Yeah,
It's like
exactly.
you might as well throw your money inside I don't know. You might as well go gambling in Vegas. No, it's not gambling in Vegas because you're literally burning your money at that point. You have to sell that day.
Yeah.
Well, that's actually the argument for the leaps. I'm kind of playing devil's advocate here because when you're talking about the $5 theta, or you're talking about the implied volatility crush, those kinds of issues are more prevalent when you're playing shorter expirations. If you're doing weeklies, monthlies, even 3 months, 6 months out, your theta is going to be a lot higher. And then if you have IV crush, that could really eat into any potential profit, and you end up holding it for a few months, running out of time. And during that time, while you're waiting for it to go up, your theta is increasing every single day. So the reason why I actually, when the three of us are trading, Felix, Fro, and myself, sometimes Felix and Fro will go in on the weeklies, and I prefer to just go with the longer expirations, whether it be 6 months, a year, or even 2 years out.
Yeah.
Theta is usually at like 1 to 2 cents.
Right.
Implied volatility is usually about half of what the monthly or the weeklies are. So
Yeah.
you have a little bit more wiggle room, and it's a bit safer. I mean, with options, it's a very risky investment style.
Mhm.
But I feel like if you do give yourself more time, especially for the swing trades, it's better to have more time or too much time than to have too little bit time left.
For sure. I agree with you. And I would just say that that's actually a strategy that I implement as I'm trying to grow a small account. So going into 2021, I'm going to do a new challenge. Y'all can follow me on Instagram. I made a page called English Major Trader. So my goal is I'm going to try to grow a $5,000 account. I don't know how I'm going to do, but I'm going to give it a shot, right? I haven't done this in a long time. But if you're looking at
That would
account,
be really interesting.
if you're looking to grow small accounts, I really encourage you all to trade like 1 month, 2 months out, right? Because that gives you something like in the middle of a weekly call versus a leap call, right? Let's just say leap in this case as in like 6 months, right? Obviously, you know that the further you go out, the more money, less reward, right? Shorter, cheaper, more reward. But if you play the middle, that's actually a great way for me to. That's something I've had a lot of success with, playing the short, like the middle, and then from that point on, once you build yourself a nice cushion, then you start, going into the shorter time frames. I think the big issue with a lot of people is once they start making money, they feel the need to continuously use that money, right? And that's why I was very, very impressed when Fro was like, "Yo, right now I'm straight liquid." I'm like, "Damn, I've been trading for like a year, watching market every single day, and I can't even stay percent liquid." But I've been better at saying, okay, you know what? If my portfolio is at 90 grand, doesn't mean I need to fucking use $85,000 or $85.99. I'm better at saying, okay, let's allocate 45 towards swings, and let's allocate 30% towards equity. So right now, I'm still trying to find my balance, and I know that going into 2021, my goal is to be able to take $50,000 positions. Right now, I can't. I could take a 10 grand, 20 grand position for a day trade, but 50 grand, mentally, I'm not there yet.
I think you bring up a really good point, especially for a lot of beginning traders. And I wish I kind of knew that going into it first, about playing the longer options. I think options and an investment style in itself is very, very confusing. And it's very lucrative when it goes for you, but we know that 92% of traders lose money. I mean, it fluctuates. Sometimes it's 88%, sometimes it's 90. Let's just call it 10. But most of traders lose money. And when options go against you, it goes against you fast, really fast.
And hard too.
It's basically like trading, and at least Mike and I, we started in penny stock trading. I don't know, Felix, I think you dabbled and then you said, I'm staying that F away from it.
Yeah. Hey, that was inspired by Tim Sykes too.
And he has some good stuff. I mean, if you follow his rules, you won't get burned. But it's like trading penny stocks without any sort of knowledge. It's like Tim Sykes says, it's like bringing a knife to like a gunfight. It's horrible. It's bloody. It's ruthless, and the market doesn't give
a fuck
at all. And so, I think what your strategy is about having about a month or 2 months or 3 months for the options is very good. And then once you start getting profitable trades and a lot of consistency, then you can move up to the weeklies for your sniper results, because the only reason why you play the weeklies or the dailies for literally like the lottery tickets, it's basically only because you are good at what you do, your strategy is good, your entries are good, your exits are good, and you're consistent. It's essentially like scaling up. It's like adding extra contracts without adding extra contracts, because that contract was worth so much more to go really high or really low. And to a beginner, I've I've done a lot of daily calls in the beginning and just got shot in the foot and in the head. And I mean, it was my wallet was shot, my emotions were shot. The whole day would be bad,
Hey,
and I
bro,
would
like,
think about drinking at 8 a.m. You know, it would be like, I
bro,
don't
you
know if
know,
you ever experienced having emotional like loss. I think we've all been there, but emotional loss of hard-earned money is not a very good thing. And
bro, bro,
it's like a drug, you know. It's like, man, I just lost so much money in the stock market. Man, I gotta go back, deposit
you,
more money, more
you,
money, more
you
money.
know,
Max credit card this time.
I apologize for laughing because that's a little fucked up, but
No, dude,
I laugh because that shit brings back memories to me, right?
it's true, man.
Um, Throughout this pandemic, I've had a lot of people reach out to me. You know, some say, "Hey, you know what? I want to make money." Some say, "Yo, I blow my account because market crash. Can you help me out?" And I've always noticed that people who don't make money in the markets are people who don't have a proper foundation. People who try to fucking trade options before they even learn about price action. Right? I used to trade penny stocks too. And what actually like really woke me the fuck up was this stock called BPTH. Okay, this was a stock in 2018 when I was still in college. The stock went from $1, 1 point something, all the way down to up to like $69. 69 was an iconic number I just fucking remembered. And I remember I had a couple hundred shares. And at that time, I'm in debate class. Like I'm trying to debate some shit, and I'm like, yo, I can't do this shit. I just fucking lost a lot of money. Like money is more important than this debate right now. Just give me the F of the day. I don't give a fuck. And I'm calculating. I'm like, yo, I could have made fucking 20 grand had I not fucking sold out, had I not used the stop loss. And from that point on, like that kind of taught me, how to be a better trader. And the same thing with trading 0 day expirations, right? Like a lot of people come in like, oh, you know what, 0 day expiration, 2 minutes in, I'm up 15%. This is phenomenal. I'm gonna just hold on to it. Next thing you know, one pullback in the 0 day expiration, that shit will fucking wipe the shit out of you, and you won't even know what the fuck just hit you, right? So trading 0 day expiration is absolutely fucking risky. If I ever do it, it's with no more than $500, no more than $1,000, because that is just straight up Vegas money.
Yep.
And then
Yep,
obviously, one thing that I've been more sort of disciplined on is after like Wednesday, I try not to trade weeklies. If I do, I'll size down. So put in like a 1.5K. But after Wednesday, I try not to trade any weeklies. And also just keep in mind for you guys too, right? I think a lot of people tend to forget this. This week, last week, on a Monday, your option premiums are technically trading on a Tuesday basis because of the fact that market is closed on Friday. Actually, it's actually trading faster than Tuesday because this Thursday, market is having a half day. So these are things to kind of keep in mind, right? Because if you notice on the premiums and the options, when they pull back, premiums drop faster than normal. And I think that sometimes people tend to forget that stuff, right? Because we're so caught up on like, oh, you know what, 3 day weekend, can't wait to put my money at work, can't wait to open my portfolio and see where I'm at. It happens to me. I'm sure it happens to all you guys. So just a friendly reminder.
Well taken. So, hey, Kevin, I may have missed it, but can you help me understand what's your methodology for your entries, for your exits? Is it primarily technical? Does it have to be combined with any catalyst? What are you looking for? And I know obviously you talked about FinViz, but yeah, if you are technical, what's your indicators? If it's news, what's your news outlet? Whether it be
Sure.
Twitter or Bloomberg or whatever.
Cool. So let's talk about the first one that I remembered. You said news, right? So if you all go on Thinkorswim, and then you click on support, if you click on support, or if you click on chat rooms, there's Benzinga Squawk. Benzinga Squawk is basically your Bloomberg, right? If you're a beginner trader, I don't recommend you use this because you will get fucking you get your ass handed to you. I mean, Benzinga Squawk is basically trading options on penny stocks. Them shits move mad fucking fast. But, you know, I've done my testing. I put in my money. I lost my money, and then I've been able to make money. So if you're looking to trade very, very fast, I'll do that from time to time. That's one thing. But I'll only do that for stuff that I'm very, very familiar with or that I've heard of before, right? So one example would be Charlie says last week, oh, Apple's trying to get into iCar, right? Apple's trying to make an electric car. Off the bat, just knowing Apple and just seeing how Apple broke out of that monthly, out of that weekly time frame, that's bullish news, right? Anything with more revenue, anything with commercialization, right, which is what I did while I was working at Colgate, anything with helping a company make money is good news for investors, right? So that's one thing. And then the second thing is in terms of trading, right? So it really depends, right? Like if you're looking to trade options, one of the things that I personally like to implement is I like to get into an option premium before the breakout. And if you notice, what will happen is when the stock actually breaks out, not only does your premiums get a jump, but you'll actually get a bigger boost. And we call that like a delta rush. What I mean by that is next time you guys are trading, when your contracts become in the money, or next time y'all trading, take a screenshot of what the price of the stock is at and what is your delta. And then as the stock starts grinding higher, especially if you're in calls, then like say once you're at the money or once you're in the money, take a screenshot of what the delta becomes, right? You'll notice that the delta when you're in the money or at the money will become significantly higher than when you're out of the money. And that is what we call oftentimes a delta rush. So I like to trade that stuff when I see, you know, a bull flag or when I see a bear flag. And then another thing that kind of has helped me emotionally is pre-COVID, I was trading with around like 10 grand, right? So 10 grand into a position, put a 30% stop loss. However, I realized that with options trading, it's very, very hard to put a stop loss because shit can go from fucking minus 50% to plus 200 the next day. So what I've accommodated for that is now I trade with 2 grand or 3 grand, and I let that go to 100%, right? So I'm willing to lose all of it instead of the traditional, 10 grand, 30% stop loss. Now it's 2 to 3 grand, go into position. And if I lose, cool, I'm okay with that because I built myself a cushion. And I know that when I execute like that, mentally, emotionally, and spiritually and physically, I can execute at a higher level because not everyone is used to putting in 20 grand, 10 grand into a position and start seeing the numbers flicker like super fast. And I could say that because a few months ago, right when the first stimulus package passed, I had about 475 contracts of American Airlines. They were at about a little over 50 cents. So that was around like 30 grand in calls. And I sold at a 10% loss, right? So 30 grand, I lost around 3 grand. I was upset about it. But 2 days later, that shit went up 200%. 30 grand could have been 60 grand. So I knew what I did wrong. I reflected on my mistake. Okay, it was, hey, Kevin, you're putting too much money. You're trying to fucking trade like you're trying to retire tomorrow. Let's chill down a little bit, right? Let's be consistent and let's focus on numbers that are actually attainable. So now my goal is anything from $500 to $1,000 a day. Means in 1 year, right, with 256 days on the market, I could still make $250,000. I could still make 6 figures. A lot of people don't realize, but 6 figures is a lot of money. And, you know, that shit sometimes, once you make like 10 grand, 20 grand, you're like, ah, shit, that's not enough. So that's kind of what I think about to ground myself. It's like, let me actually make $250,000. Let me make 6 figures. And let me do that consistently before I start thinking about, you know, hitting $1 million and stuff along those lines.
So let's build on that. So you're consistent. So you have your goal in mind, which is awesome. And you have your daily goal in mind, which is awesome. It's $100,000 or $1,000 a day is $250,000. And then obviously if you just make $500 a day, that's still $125,000 a year. And I'm not going to complain, and I don't think anybody would complain about that. In addition, with your already with your income right now with your salary job, which is awesome. So any extra money is great. So now getting to that point, right? You have your goal and then your entries and your exits there. So how do you plan on getting there as well? I mean, is it primarily options? Are you doing stocks? Are you doing day trade? Are you swing trade? What's
Yeah,
your
yes.
methodology?
So a little while ago, I talked about how I got greedy, right? I talked about how mentally I wasn't ready, right? And what I've noticed with a lot of people is there are certain people who every 2 weeks, if their account is over 25 grand, they withdraw that money and then they funnel that into another account, right? That's one strategy that I've noticed. I've seen some people who can trade with $1 million, right? I have friends who can trade with $1 million, no problem. But they're super, super fucking disciplined. They send me screenshots and they're up 10K. And if you think about it, $1 million in a 10K day is literally only 1%, right? And what I've noticed is whenever I was trading with numbers that were ridiculously crazy, like a few months ago when I was sitting around like 75 grand, I was like, yo, let me fucking put, 40 grand into calls, right? That's when I started fucking up, was because I started, trading with, bigger size when I had not built myself a large enough cushion. So that's one thing. And one of the things that I've started to implement more often is if I have a big day, right? Say I make 10 grand, I pay myself 10%, 20%. And when I pay myself, right, I keep a portion of that for Uncle Sam because he's a greedy motherfucker. And then I funnel a little bit of that into long-term positions. So just equity stuff, right? So I bought Fastly at around like 65, 62, Apple at around 100, 105. So those are just money and pools that I kind of have that I just allocate towards long-term stuff just to avoid greediness. Because, I mean, we all get greedy.
I love that. So you're basically saying 10% is basically a good benchmark for capital reallocation once you start making a lot more money on options. Withdrawing that or even funneling that into maybe like index funds or buying.
Hey, Felix, sorry to cut you off, dude, but you're kind of dropping in terms of the volume. Can you try to repeat it?
Yes, everyone.
Yeah.
I need better internet, man. I need a better setup as well. But
I can hear you better.
Because right now, this is pretty much a dilemma I'm pretty much in. I feel like, if I have like a good week, I might just
go a little nutty.
Go all nuts on it, right? Because I'm building a momentum. I feel like, okay, I can take over the world. Like, dude, any trades that I go in, I'm pretty sure I'm gonna make money, especially during like a bull's market.
Yeah.
So with that said, when you have your input of 10% as a benchmark, did you say 10%? That's your benchmark?
I said 10% when I have a big day, right? So if I make over 5 figures, 10% is something that I just funnel towards longer term investments, because mentally and physically and emotionally, I'm able to deal with bigger numbers now, right? I'm at that phase that you mentioned. I've been there before. That was in March, right? So in March, I was in your phase. Bull market, fucking easy to trade. Every day, just buy calls, make money. Right? I've been there before. Now how I've been able to deal with that hump is I had to fucking humble myself and I had to check myself. I had to look myself in the mirror and be like, yo, Kev, what the fuck are you trying to do? Are you trying to become rich overnight in this market? Because as we've all said before, market don't give a fuck about what the hell you got going on. Market don't give a fuck about what happens in my life. Right? Like, I was trying to short the market when JP money printer was printing nonstop. And the same thing, like, what was it last week, right? Coming into the market fucking gapped down because of Black Swan events with the new COVID strain, right? These are things that we must pay attention to, and that we must not be like, yo, I got more money than I got $50,000, so I could beat this market. Like, no, bro, it doesn't work like that. But that's something that I had to really, really look myself into the mirror. And that was like one of my biggest struggles, which was like, yo, you get too fucking greedy. I mean, you're up to 100% and you're looking for more. I mean, like, so once I was able to do all those things, once I was able to just like close my computer, once I'm done trading, that made me better. Right. And that's why, like, over the span of the next few weeks and the next few months, I challenge you guys all to watch my Instagram story. Right. Because I literally spent all afternoon and I had to plot like, yo, if I trade with a $5,000 account, how much is a good amount that I need to grow every single day? And I said to myself, I need 5%. So 5% is about, I believe that was something like 500 or 250. I don't remember the math.
250. Yeah.
250, right? So I said to myself, if I can make 250 on this account over a span of a week, that gives me about 1,250. So 1.25K. That'll be foundation and cushion number one, right? And then I got to build from that. But I had to realistically look myself and be like, yo, you're going from making a grand, right? Making $2,000 a day to now being like, yo, you got to make $250. And I'm not saying I make a grand, $2,000 consistently, but when I was hot, I mean, fuck, I was clearing $2,000, $3,000. And then I was like, this is not enough, right? There's been multiple scenarios where I've been up 17K. I'm like, you know what? Let's try to make it a round number. Let's go for 20. Let's go for 25. Fucking next thing you know, go from $17,000 a day to $2,000 a day. It's happened to me multiple times. So, you know, you need to look at yourself and be like, yo, how much money are you happy with? Because in the markets, man, you know by now, unlimited printing. Fucking stocks go up like crazy, right?
Yeah, all praise Powell, man. All praise Powell.
All praise Powell, but you know, we also have to be realistic because we have to understand, like, Powell is, a lot of people don't realize, but Powell is the first Federal Reserve president to not have an economics degree. That's number one. Number two is Powell has a lawyer degree, right? And number three is Powell used to work at this company called it starts with a C, like the Carlyle Group or some shit, which is basically a private equity company. And private equity companies, their goal is to basically squeeze the shit out of little people and like take them over and then figure out a way to milk them and then sell them off for profit. And I think a lot of people don't realize that, because Jerome Powell is one of the richest, if not the richest, Federal Reserve chairman ever to sit and hold that position. So while jokes aside, you know, fucking stock market is going up like crazy, we need to be realistic. And you know, these are conversations that I have with myself mentally and emotionally, and I think I do a good job, and that has been able to translate to consistent ROI for me.
Everybody always has an agenda, and I can see his agenda now. That makes a little bit more sense. Makes a lot of sense.
Yeah, I mean, I'll just do a quick search. Let's see, Jerome Powell net worth, right? So it says JP is one of the richest to lead the Fed with a net worth between $20 to $55 million, according to a financial disclosure. Powell has worked as an investment banker at one of the top private equity firms, the Carlyle Group. Right, so
What a guy.
yeah,
a
lot of people don't realize that.
Switching gears and coming back to your entries. So again, I think, are you a technical trader? When do you enter into a buy? Is it just for FinViz, or how do you enter in a trade? Is it
what I mentioned on FinViz was more for swings, right? With the smaller caps, with the equities. As I mentioned, you know, it's kind of hard because I can't share my screen, but I can literally, you know, walk you through a play that you guys can kind of look on your end.
Yeah, Felix, you want to pull up one of his stocks that what's the stock that you played today, Kevin?
Oh, did I trade it today? Cool. I traded Snow today, and I made money off this one.
Snow's great. Snow's a hot stock right now,
cool.
Guys.
So if you guys want to, you can share Snow. I'll show you what I look at.
I'm going to try to bring up Snow on mine as well. Let's take a look.
Do you want to post it on TD, or is there like a...
You can go on TD. I'll kind of show you like a little bit of my setup that I use and kind of what goes in my mind, right? Hopefully this will also help you guys too. Okay, so somebody want to share the screen?
I think Felix is about to bring it up right now.
Oh.
Cool. Make sure you blur your, you know, account number and stuff, because we don't want people to be able to get access to that stuff.
That's already done.
Okay, cool.
Okay, let me see.
Oh, Snow, you played the put side, huh?
Of course. Okay.
I love it. Look at
cool.
that.
So, Felix, what I recommend is on the bottom left right here, do like a quick chart.
Hold on. Say that one more time.
Bottom left, you should be able to see a plus, right? And on the plus, you should be able to do quick charts. Yeah.
Okay.
Okay, cool. So in that, you could type in QQQ. Right. So the reason why we want to put one of the market indexes up is because at the end of the day, QQQ, SPY, DIA, Dow Jones, these are big daddies, right? We cannot ignore them when we're trading options, especially fucking options. So you can kind of zoom in on QQQ. And then, yeah, exactly. And then for this example, because I'm trading puts, so are you pull up Snow?
Yeah.
Okay, so
Yep,
cool.
Snow.
So then open up another browser.
Another chart you meant?
Another window. Yeah, exactly. Sorry, another chart. And then type in this. You ready? Type in period SNOW 201231 P300. Something come up on that?
Again.
Okay,
You're
I'll
bringing
read
up the actual options chart.
Yeah. The actual option chain. You need that one more time?
Yeah.
Dot period Snow 20 12 31 P300. You get that?
Yeah.
Cool.
Can you guys see it?
Let me just look at my screen real quick to make sure I'm not saying some crazy shit. But yeah, okay, I can see
Are
it.
you at the 1 minute?
Yeah, so one of the things that I've been kind of testing is time frames between 1 minute, 3 minutes, 5 minutes. I really like 3 minutes for entries because it helps me reduce some of the noise. But in this scenario today, I used a 1 minute. So I basically entered this play at around 3:20. Okay. So the reason why I entered this play at around 3:20 was because I was able to kind of see that there was extreme weakness, right? There was a rejection at around 3:16 at around 1:35 p.m. And I just knew that Snow was also setting itself up to test the low of day. But I had a feeling that, when I was looking at SPY, SPY also started to give up its uptrend break, right? Meaning at around 318, 319, we start to see a little bit of a 1, 2, 3, 4, right? So a quadruple top. In this scenario, SPY looks to me more like a, head and shoulders formation, right? So just off that alone, I started to see that market is lining up. Tech is starting to look a little weak, right? QQQ is starting to look a little weak. Snow is starting to sit around the low of the day. And then from that point on, you start to see at around 325, right? So from 320 to 325, we start to see that bearish pennant forming, right? And I'm not a very big fan of trading puts, but every now and then when I see extreme weakness like this, I'm pretty confident that this stock is not going to bounce, right? And at the end of the day, taking trades is literally all about probability, right? So SPY for me lined up because, as I mentioned, I saw that quadruple top. I saw that head and shoulders. QQQ was starting to act weak. There's also news that have come out around 10 minutes ago saying that there's about 12 to 15,000 cases in California. And then if you look at what happened, look at that red candle on Snow, right at 325. Can you zoom in at around 3:25 p.m.? You could just drag it and zoom in.
I gotta minimize this.
Are you?
Is that good?
I can't really see it on yours, but basically, just to kind of walk you through it, if you look at the chart at around 3:25 p.m., we start to see that breakdown of that bearish pennant, and immediately that stock makes a low of the day. But I know that from that kind of trading alone, that's not really my style, right? So I held it for a little longer, and then the stock consolidated. And then as the stock consolidated, SPY started to drop even further. So I held it a little bit, and then I sold my option premiums for about a 40 to 50% gain. Oh, no, 40 cents to 50 cent gain. Obviously, that went up to 6.5 from my entry at around like fives, so about $1.50. But like I said, I just kind of had to give myself a reality check, and I reflected on the trade, but I'm not upset about it because I'm trying to grow that small account. So now I have about a few $100 cushion from that $5,000 mark.
Kevin, sorry, you said 3:25 Eastern time, so that's
PM.
when you entered your put PM, right?
Yeah. So
PM.
right before that candle. So at around like 3:20, 22, 3:23. Once I started to see it leak a little bit, and leak as in like start to break that shit. So around what is it? Like 3:24.
So that's already that you're at the tail end of this downtrend already, right?
Yeah, right. And like I said, right, what I've been very, very good at is being disciplined. And what I mean by that is if we look at Amazon today, right? Amazon is up around 100 something points. But when we trade options is based off of every $1 stock move. So we don't need to fucking capture the whole move down. Obviously, that'd be phenomenal. But realistically speaking, most people cannot nail the fucking top and nail the absolute bottom. It's so fucking hard. So if I can get a small sliver of that, I'm able to still make money, right? And so as I mentioned, the option premiums at that time, this was even before the volume started coming in, before the IV started ramping up. So I was able to get in at low fives, and then I sold at around mid to high $5. And then, towards the end of the day, it started to sell off a little more. Premiums went to like 6. But I got out my support and resistance, and I didn't want to get greedy because it's going to be potentially crazy. And as I mentioned, I'm trying to grow a small portfolio, and I can't go broke from taking profits. So that's kind of my mindset about executing that trade on snow today. I think I did great.
Yes,
but I could have done better.
Can you help remind me again which expiration and strike that you chose?
Weeklies, 300 puts.
Weeklies, 300 puts.
Yep.
Wow, it ended at 700. Wow, it's a big spread too.
No, the spread
right
spread wasn't actually that bad.
300 at the time, right?
Yeah, I mean, what's the spread right now on your end?
$6.10 to $7.
Oh yeah, that now it's worse. But when I was looking at it, it was spread was probably like 30 cents, 50 cents. So,
got you.
Another tip is if you're trading puts, especially weeklies, and you think that the stock price is going to go up or down, look at the delta, right? So the delta is 0.3, and option contracts right now are trading at $3, and you think it's going to go up a dollar. Set it at around like 3.2, 3.25, so that as premiums start to rip, you're actually able to get filled at the top, right? So that's another strategy that I'd recommend, because a lot of times stock price might go up and people aren't able to sell at the top because, they wait for it to go to the top and then they start entering their sells in their phones. And by then it's too late. So that's one method of scaling that I highly encourage you all to look into. That's how I'm able to get my fills very, very fast.
Say that one more time. So you use your delta for.
Okay, so let me look at my chart real quick so I can kind of walk y'all through this.
Sure.
Right. So I traded, as I mentioned, 300 puts, right? So spread right now is 6.10, or bid is 6.10, ask is 7, right?
Mm-hmm.
I know that when I automatically look at this, judging by how often I trade snow, I know that if I put 6.5, I'm likely going to get filled, right? I know that there's probably going to be
right? You do the mid.
I know that there's probably going to be a mid filler, just because this is a stock I know, right? So that's one thing, is know the stock personality. And then the second thing is, if you look at the 300 puts, the delta on that is 0.42, right? So as I mentioned, this is for every $1 drop. So I mentioned in my group chat today, and Felix can kind of pull it up later. I said, watch out for the break of 305, right? And I can literally send Felix this right now, just to show him. Right, so basically, I was looking for the 305 target. So I knew that that was the low of the day. So I knew that if Snow broke that level, we were immediately going to see a quick drop. I didn't know if it was $1 or $2, but I knew that targets were around 303 to 305. So when it dropped $1, I knew that my option premiums would go up 0.4, right? And I mentioned that I bought my contracts at around point. I knew that I bought it at low fives and I sold around mid to high fives. So immediately when Snow broke 305, it went down $1. So I immediately got out because I knew that my option premiums would go up 0.4.
Awesome trade, man.
Right.
I'm looking at it right now, and your delta. If you held also that your delta to theta ratio is really bad, right? If you held it to tomorrow, your theta, look at that. It's a negative 1.1.
Yeah. 110, right?
And your delta is only 0.42.
Yeah.
So you can't make any more money.
I would need at least a $3 move just to stay even, right?
Yeah.
To the downside. So I knew that realistically that wasn't going to make any sense. And as I have mentioned to you all, okay, puts went up to 6.5 towards the end of the day. I could have made an extra $50, extra $100 per contract. But look, I'm trying to grow a small account right now. I'm trying to mentally get myself back there. So this is a green trade. Grew my portfolio, gave myself a little nice cushion. So I can't be upset about that.
Snow is a stock that's actually on my watch list and I'm trying to add into my longer term portfolio. This is a very interesting stock. Right now, it's still in the bearish downtrend. And
here's what I'll say to you. Here's what I'll say to you, Fro. You're bullish on the stock, right? If you want to add long term. Yes, no?
Yeah, I'm bullish,
okay.
but I'm waiting for a time to buy right now. Nothing looks like a buy right now.
So let me challenge you. Are you familiar with lockup periods?
No.
Okay.
Help me understand what that is.
So all three of you, any of you know what lockup periods are? I would assume not.
Yes, when the insiders can sell their shares.
Yeah, exactly. So lockup period.
Like the Nikola thing.
Yeah. So lockup period for Snow, phase 1, I believe, has hit last week or 2 weeks ago, basically a few weeks ago. So phase 1 means that insiders can sell like 25% or 20%. I don't remember the exact number. So if you look at Snow, fucking stock went from like, let me double check real quick, went from like $400 down to $300. So that's already number one. And insiders got in at like $20, $50. So I'd be cautious on that because I learned the hard way in 2018 when I first started, learning about some of this stuff. I've been taking it very seriously for a year. BYND went from like $60 to like $250, and then from $250 down to fucking $100-something because insiders were just nonstop selling, man. And when I say insiders, right, anyone who can get in pre-IPO, these guys have at the very minimum $10 million. So we have to be realistic and understand that we cannot fight them because they got way more money than we all have right now. So if you're looking for that, my best bet is I would say size in because next expiration, when the lockout period starts to expire, we're gonna start to see big drops. We've seen that a lot.
Actually.
When is the lockout period ending?
I don't remember the date off the top of my head, but you can literally just quickly Google it. And if you don't believe me, just look at stuff like Fubo, right? Fubo went from $60 to fucking $60 to $40 in a span of 3 days because of lockout expiration dates nearing. And we've seen that trend significantly with a lot of stocks. So just an FYI before you go crazy and you go all in because these are stupid mistakes that I've made before. And I'm just cautioning you about it.
That's actually really interesting that you brought that up. That makes me think like it's worth the time to look at previous lockup periods on just a bunch of like a sample size of say like 20 to 50 different stocks.
Yeah.
And I'd be pretty confident that they're all going to go down, right? So maybe
Yeah.
there's some opportunity there. We can
For sure.
A lot of
short
puts.
or play the puts on those types of upcoming lockup periods.
Yeah. So I actually tried to play the fucking puts on well, my team did. I luckily got out because I was not trying to be greedy, but a couple of them tried to like fucking swing puts. Bro, I tell you, Snow puts went down like the stock went down like $50. Next day we woke up, that shit is right back to normal. So everyone who swung the puts got IV crushed. But a week later or a few days later, if you bought the puts, they went up like fucking 500%. And I think that's because market makers probably knew that the lockup period was coming. But just an FYI, and like you said, Mike, if you collect a sample size of all those companies with lockup periods expiring, you'll see a big trend, and that's that. A lot of times, if it's before, a little bit after, or during the day of, we tend to see a lot of red.
And
So, given the IV crush, I mean, if the lockup period date is already set out there beforehand, it's in the SEC filings, etc. People know about it, market makers know about it. So, given that there's a high probability for IV crush, how would you go about playing puts on that sort of a play?
Yeah. So the first thing is, right, if you look at the option chain, right, if you look at the far right, market makers always have what we call an MMM, which is market maker expected move, and that's the first thing, right? So if it's anything over like anything close to 100%, don't fucking buy that shit, because in March, I was buying weekly calls on Marriott for like $16. I didn't understand at the time, right? Because nobody had ever traded during a pandemic. No one had ever traded with VIX levels, from 2008, right? Like none of us were old enough to understand what it was like to trade in 2008. So I thought paying $16 for weekly puts on Marriott or weekly calls was normal. I mean, they trade on average like 2.5 or $3 a pop. So that's first thing. Second thing is you wait for the IV drop or the IV crush to happen before you get in, right? That's why this requires you to start, monitoring some of the option chains, right? All you got to do is enter that specific code. So you always do period, ticker name, and then the expiration year date first, and then month date, and then Friday's expiration or whatever you trade, right? So most options trade on a Friday expiration. And then you do P if it's puts, C if it's calls, and then the number, which is the strike price. So I highly encourage you to monitor that. And then once you start to see that the IV or the premiums are starting to drop, then that's when you start focusing on how to, start nailing a trade, right? Felix might know, or maybe he doesn't know, but a few weeks ago, I called out a CRM trade, right, in my group chat. I'm like, yo, everybody, Christmas special. And I bought CRM calls targeting, I bought 250 calls, right? I bought them at around 1.7 and then I sold them at around 2.5, 2.7 because I saw that the IV was so low. And at that point, it had already been a few days after CRM had earnings. So implied volatility had already kind of settled down, right? But then again, I made that fucking mistake again on Thursday because I played BABA calls and then I didn't sell all of it. I was like, I'm going to swing a little bit. And then I look today and I'm like, why the fuck am I down like 20 something percent? And I'm like, oh fuck, I forgot about the IV. So, it's easier said than done, but just try to think about those things because sometimes it can be costly mistakes.
So hey, I'm gonna just interject for a second for our viewers that don't know a lot about the options and they're thinking about just the underlying stock.
Yeah.
Everything that we're talking about right now, it's still prevalent and relevant because, for example, like the lockout period as an investor for all of our viewers, that's important stuff for you to know if you're gonna be long stock. Like Kevin highlighted, you don't want to be long a stock when you have certain events that may be coming up, and you should be well aware of any stock that you're going to be investing in. A lot of people call it DD for short or due diligence. And a lot of the technical aspects that all of us here are talking about in terms of options are fine-tuning the options that we would like to get into. When anybody trades options, what we're talking about now is how we overcame the noob mistakes, the early mistakes that we did, like what Kevin talked about with the $16 calls on something so, it seems so easy and cheap, right? Doing weekly calls, doing daily calls. What the heck is Ivy Crush? All these items that we talk about are very important when you get into the options game, and it could be really ironed out by a lot of Kevin's recommendations when you say, hey, let's just put an expiration at least 3 months out, or at the very minimum at least a month, to kind of protect yourself. And when after a big event happens, like say earnings day, or some type of event that happened when there's implied volatility, which I highly recommend that you guys take a look at, which could crush you essentially. They're all very important things to take a look at when you go into options. But still, if you don't trade options, if you're doing the underlying stock, everything that we're talking about, key information on when to go into a stock and when to get out. If you're only a bull person, if you're only a person that buys stocks, you still want to know when a stock's going to go down, because that for you as a long-term trader is very important to enter a stock, because you don't want to enter a stock when it's already high, where it's very bullish. You want to wait for some bottoming. You want to wait for a good purchase, a good buy. And so I just wanted to interject. And I know we got a little bit technical here, which is very good for the advanced traders, but for all the new traders, this is still good information. And you'll get there soon enough, because a lot of us here just started trading this year. And I mean, I traded, I don't know, 2 years ago, but it was like just 1 or 2 stocks on Robinhood. I don't think that counts.
Yeah, exactly.
The pandemic can do miracles for a person when you're just sitting at home staring at a computer screen.
For sure. And that's another reason why the stock market has just been fucking going so high, is everyone all of a sudden has wanted to become a day trader, right, or a stock trader or a swing trader. So basically echoing all your points, I would just say that understanding these lockout periods are super, super important, because most people who trade stocks who are bullish on something, they don't really have a stop loss. So what happens is, if you get caught in these big drops, you're going to be a long-term investor, and that means you're ultimately going to be tied. You're ultimately going to be tying up that capital, because most people are not going to sell their equity for a loss when they're down that much, because they know that they could just keep holding on to it, and their mindset is, oh, you know what, it's going to go back over time, right? But if I'm being honest, there's some stocks that may not ever go back to their glory days, right? Like, for example, if the vaccine came out, I'm pretty confident in saying that I do not see Zoom going back to $600, right? I mean, today, last few days, Zoom has just been getting wiped. So I think that's why it's super important to understand stuff like this, so that you do not become what we call a bag holder, which is very prevalent in penny stocks, right? When the shit fucking rips and then you buy at the top and you just end up holding. Because I'm pretty sure we can all
penny stocks is a perfect example of holding and hoping just isn't a strategy, because those stocks go up and they never come back. I mean, they go up, they go down, and they never come back.
Yeah, they almost never come back.
That is the lottery tickets. That's lottery tickets right there.
Yeah.
We talked about in our last segment. We called it hopium, and a lot of people call it hopium. And hope is not a strategy. It is not a strategy. I think even us. I mean, I don't think Felix and I and Michael are noob traders by far. I think we've advanced a little bit further, at least not to be called noobs.
But
we're
I think
still young, and we still have young money. But
I think we all make noob mistakes sometimes, right? Because at the end of the day, we're still young, and we let that instinct kind of get to us. Like, yo, I'm young. I can make money, right? That's why statistically they say that females are better traders, because females can, manage their emotions better, and people who are older, right? People who are more conservative, they're more consistent and they're less greedy, right? But there's nothing wrong against us. It's just we need to be cognizant of that before it becomes too dangerous, right?
Yeah, we are young bulls. We are young bulls.
I love it. And just to pretty much summarize this interview with you, I do have one quick question. So what we've been doing recently is analyzing the dark pool option type of flow. We use a software called Cheddarflow, and I was hoping because I see it once in a while on your Telegram group chat where you would put in like a large week statistic call or put options with a specific financial institution and whatnot. Could you give us a little bit more details or kind of like your ways of analyzing those type of option chain flow, and then if that offer any conviction for you to get into that stock or that option?
Cool.
Yeah,
So,
Felix, we also do cheddar flow and flow algo.
flow algo, black box, option flow, list goes on and on, right? I'm familiar with those. I use it too.
Do you use any of those?
Yeah, I do. That's where I get my information.
Out of them, which one do you prefer the best?
Doesn't really matter, man. If you know how to use it and you can make money, I'm all for it, right? Okay, so Felix.
Hello?
Can you zoom in a little more into the strikes? Yeah, okay, yeah, like that, exactly. So I would say first thing is, especially on stuff like SPY, I try to ignore those because those just get too many fucking notifications, right?
Ding, ding, ding.
Too much goddamn distractions. I like to look for number one, big orders, right? Is there someone putting in $500,000? Is there someone putting in $1 million? Because you have to understand that most people who put down that kind of money, usually it's prop firms. And if we're talking about prop firms have very, very strict risk managers, right? When I was applying for Chamath's role, Chamath was like, if you want to put more than a 5% portfolio or position, you need to write a 2-page paper. So if we're thinking like market makers, we have to understand that if they're putting that much size down, they're probably a hedge fund and they're probably very, very strict on their risk management, but yet they're still leaning so heavily on one side. That's the first thing. And then the second thing is we like to look for sweep activity, right? Sweep activity means very, very aggressive orders. They're trying to get filled as fast as they can, as quickly as they can. So whenever you see a string of those with one specific name coming in all at once, that can be a sign of a potential reversal, right? Block orders, not so helpful because block orders are, done in the dark pool. But if dark pool is usually over $500,000, $1 million, might be something to kind of look into. So I would say those are the biggest things to kind of, analyze when you're looking for that. We want to see continuous strings of sweep orders, right? But every time you potentially take one, you must use risk management. Whenever I'm looking for calls or I'm looking for puts, if I'm looking to size up aggressively, I always try to make sure I have some sort of flow backing it up before I kind of make my bias, right? So one example of a trade that I made today, this trade ended up being a loss for me because I put too much size down. I got emotional. I got faked out. But after I took the loss, I started immediately reviewing. And, Felix can kind of see that himself. I bought Disney calls today. And after I sold Disney calls, I didn't realize because Flow, like the program that I was using, their fucking data was like lagging. So I couldn't get that shit until like an hour after I'd sold for a loss. But somebody early on today bought $24.6 million of Disney calls for April 2021. When you have someone with that much size, you best believe that that person is pretty much controlling that specific stock. So if we look at Disney today, super, super, super strong price action. So those are kind of my tips on how to use Flow Algo, Cheddarbox, or Cheddarflow, all these software programs. Just know that everyone else is using them, right? Because these are at affordable prices. So you still need to maintain some sort of rational judgment, right? So if you look at the Disney calls today, super, super fucking bullish. But my software was down and I couldn't see this. So, I had gotten stopped out because I thought, Disney was going to tank. And then I sold and I'm like, fuck. So just some key pointers.
Yeah, Mike was calling that out actually this morning an afternoon when we were looking at the stocks. Primarily, I was playing SPY and Apple for the stimulus. But yeah, Disney was popping off. It's very interesting today that they would go heavy on the calls, because if you look at the daily chart right now, today it broke the all-time high ever at 179.92, and to be so bullish at the very tippity top, apparently top,
Yeah.
it's very interesting.
Well,
right?
I mean, the tough thing that we don't know about this, and obviously most people cannot afford the more premium and the institutional versions. We don't know when somebody's actually sold on this. That's the difficult thing, right? All these are orders that are going through. But what if someone is just looking for 5% gain? What if someone is looking for 10% gain? We don't know that. But what we do know is we can kind of see when they're buying. And if we see something this aggressive, probably means it's going up. And then also, speaking on, you saying like, oh, well, why is it going up on a day like this? I mean, that's the tough thing, right? At the end of the day, we are at the mercy of these big whales. And our goal is to sort of catch on to the ride the trend, ride the wave, and just catch bits and pieces of that. So those are just some things that I've kind of, eliminated just to reduce the amount of thinking that I need to do. Because when you're trading and when you put in capital, like that in and of itself is already fucking stressful. I don't need any other thoughts to kind of pop in my head. So that's
Right. Like
my reason.
Why is Disney jumping today? Is it because we have the $600 stimulus and everyone's gonna go to Disneyland now?
Yeah, exactly. But I kind of just came to the conclusion like sometimes things don't make sense, right? Like I've been trying to catch this $100 move on Amazon since fucking 2 weeks ago. Why did it fucking come today? Right? When this morning QQQ was so weak. Who would have thought that the reversal would have led to over $50 move? Like I couldn't imagine. But market makers always try to catch you off guard when you're not paying attention. And today was one of those days where I didn't feel like trading much, and then fuck. But this is part of the game, right?
Amazon insane now.
In fucking
wow. 300% move on at the money strike.
You said how much percent?
300.
Yeah.
All around. Actually, it doesn't even need to be at the money. This is for 3 days out for the weekly.
So Kevin, just one last question before I let you go, because I know it's getting late in New York.
Yeah.
Would it be ideal for our situation, or kind of like really starting out and getting used to option right now, to just hone it down on a watch list to like maybe 10 stocks, and then just be laser focused in terms of any of the catalysts, the options, statistics, and whatnot? Or would you still recommend, spending some time just analyzing on for example, using Cheddar Flow, and then pretty much any rumor stocks that people are pretty much discussing about that we have like high conviction of, do like art,
I really like the first option better, and the reason why is because versus the latter, if you don't look at Cheddar Flow and you don't listen to what kind of news is going on, and obviously I'm talking about like very micro news. I'm not talking about like macro news. Like if Trump signs fucking COVID bill, like, yeah, you got to fucking know that, because Trump and JP, these are big dogs. These guys move the market, so we need to understand that. But what I mean by that is like if Apple comes out with news about the iCar, I would encourage you not to trade that stuff, because at that point IV is going to be spiked up, volume is going to be unusual, right? Meaning like larger than normal, so on and so forth. But if you focus on 10 stocks that you watch every single day, you're more familiar with their spreads. What is their IV usually trading at? What is their at the money puts or calls trading at? Right? That's why when I was able to trade Snow, I knew that if I put my prices at mid, or I put it closer to ask as the stock price is dropping, I'm going to be able to get filled. Right. And these 20 cents, 30 cents might not seem like a lot, but this is $20, $30. When you have 5 contracts, that's $100. Right. So that's the first thing. And then the second or the second or third thing. And then the last thing I want to mention is if you have 10 stocks, make sure that you don't just include fucking FANG or Tesla, all the hot ones. Make sure you're targeting all the companies and all the sectors that these algorithms are targeting. And what I mean by that is, if you've been watching the markets over the last few months, there's been a lot of what we call sector rotation, right? And sector rotation is essentially where one sector gets hot, it keeps going fucking up, and then profit taking happens, and then it drops, and then money gets moved into a different kind of category, right? And what I mean by that is every single hedge fund has its own breakdown, right? Like Bill Ackman likes to invest in restaurants and hospitality, and then you got like Goldman, and like everyone has their own kind of piece of the pie that they like. So if you're gonna have 10 stocks, make sure you target stuff like solar energy, like EV, like technology, like industrial, so that whatever is going on with the government, some part of that you're touching, because you don't want to just be following tech, say like Facebook and Apple and Amazon. Obviously, those are companies that everyone knows. But if government hits those companies with an antitrust thing, then there's almost absolutely no play, right? Like every day the stock is going to be consolidating. Same thing with CRM, right? If you try to trade that shit when that thing is just consolidating, you're just going to lose your money, right? That's something that I try to do with Apple, is fucking consolidate for 2 months. So those are things that I would kind of encourage you. But yeah, man, that is my answer to your last question.
I really love that. Well, thank you so much for coming on. I feel like a lot of your viewers definitely took a lot of insight in terms of your trading strategies, and how like for me personally, learning a lot from you and your story as well going into this. Even with the trade flow itself, I feel like that is super helpful, man. Because I was just trying to digest all these different numbers on the screen and make sense of it for myself by doing some research and then discussing it with Mike and Pro. But you pretty much did that platform for like over a year, so definitely helped us a lot. And yeah, thank you for coming on again.
Yeah, there you go, ladies and gentlemen. Kevin, the one and only. Hey, if Kevin, for some of our viewers, if they want to go ahead and follow you, how do they get in touch with you for your Telegram, for what you do? What do they need to do?
Yeah, so they can just DM me at PapaKev21. That's my personal Instagram. Sometimes it take a few days because I got like 500 text messages that I'm bad on. So I'm trying to work on that. So I will get back to you guys. And then if you want to follow my trading journey with the small account, let's see what the fuck happens. That will be at English Major Trader. I just made it today. Just kind of showing people that you don't need a major in finance or economics to be able to trade. And I haven't done an account like this, but I'm going to try my best to grow it slowly and steadily. And let's see where we'll be at in a few weeks, few months. Other than that, I just want to say I appreciate talking to you guys. Hopefully I was able to help you with some things. And make sure you stay safe and stay healthy during these crazy ass times. And happy holidays. And I wish you all a happy new year as well.